I'm cuckoo and you're cuckoo, sing la 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 la. All the folks have all gone wild over the howdy do. It is because two funny chaps stole some more time from you. Side by side to start to glide, forget all your troubles and everything's right. For I'm cuckoo and you're cuckoo, sing la 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 la.
Hi, my name is Brian. Hopefully you enjoyed my little 1-minute demo of what's really going out there in the world of trading, especially if you're a Forex retail trader. So imagine you're the fish in the barrel, and the market maker, your market maker to your broker, is essentially the guy with a machine gun. So I'm going to show you a little demo here in MATLAB what we're talking about. Of course, I'm not going to go on about the code, but the code is available for my illustrious members, and I don't need to proceed with this any further, but it's basically after the studying of Bayesian, this is a discovery I didn't realize when I started reading some insider books and stuff about this. But I'm going to show you some really cool stuff. So what I'm going to do is I'm going to run this. It's going to be basically how it works is imagine the market making side. You're about to put your order in. You're an uninformed trader, meaning you're just a schlep. You don't know nothing about the market, but you're just putting an order in. What happens is this. So I'm going to go through the first, what we'll call trade. This is within MATLAB. This is going to be two charts. Okay? And what's essentially going to happen here, so I'm just stepping through this iteratively, is, give me another second here. Okay, so what we got here is we got the first plot, figure 1, which is essentially plotting the bid and ask prices. So essentially what the market maker is going to do, every time that order comes in or a trade happens, the market maker is going to do an expected bid and ask calculation on what they expect your bid will be on what they're offering. So let's get to it. I could be wrong on this, but this is what I understand it is, and I was kind of surprised by it. So as I said, I'm going to blow up these two plots. And the second plot, just give me a second here, I'm just going to show you. The second plot is what you really want to watch. The second plot is really your spread. And that's the spread between the bid and the ask. Now, that's where the opportunity lies for your market maker. Of course, that's your broker. Now, this is probably happening in other types of assets, but specifically it's going to happen in the world of, so let me just show you here. Let me just probably run a couple of iterations here. Let's do a continue. I haven't seen the spread yet. You can barely see it. Maybe I should blow up this puppy here. Yeah, you can probably not yet see it, but you'll see the little dotted line here, which represents the bid and the ask. Just a couple of more iterations, you'll probably be able to see it. Okay, it's starting to form. Continue. Continue. This might take a bit of time. Let me just see if I can zoom out. Okay, let me just, but these are each trade, and what's happening is you'll see the bid and ask spread, but you'll see a little bit of an opportunity over the first couple of iterations. This is over the first, let's say the first few seconds of, probably even milliseconds to be precise, at a high frequency trading level. Actually, you're starting to see the difference here between the solid line and the broken line. That's your bid and ask. So in between each one of these, there lies an opportunity for the market maker to take full advantage of that. And because they are putting the bid and offer in, they can optimize that as an opportunity to basically skim a little bit of profit off of your ask when they put the bid out. So essentially, that is what is going on. Let me just get rid of that breakpoint. Let's see. I'm going to get rid of this guy and clear that breakpoint, and just hopefully I can show you a better description of it. So you'll see it, boom, 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 boom. But you'll see right here between that bid and that offer. So you can see it happens within the first set of iterations on those bid and asks. And this is your spread right here, and this is your bid and ask. And in between those bid and ask, you'll see the opportunity lies right here between that spread. And that's where your market maker might trim off a little bit of profit for themselves, and you wouldn't know, on a couple of pips. Imagine that they do that on the Forex on a huge level. Lots of money to be made there. So if you're a market maker and you want high frequency, this is the place to be on this particular model. And again, I identify the sources of all this stuff and the source code itself for all my members. Hopefully they'll help you out and kind of give you a better picture. Unfortunately, I don't think you can do anything about it. And especially, as I said in another video, this is I can never see this being regulated. Boy, oh boy, I'd like to be a money maker or a market maker.